All right, I welcome all to Daily Stock Market Mutterings Trade Review and Recap for the 25th. We saw an incredible bounce day, a big time grind up, especially in these beaten down tech names. But I tell you what, tech may be wrecked because Amazon here after hours, not looking so good. Now, anything can change, but this is definitely not what the bulls wanted to see, especially after such a strong day. So we're going to talk about this Amazon here. Also for us, it was a green day, a little bumpy, a little tough to squeeze out every dime, but that's what you have to do sometimes. I put the brokerage account statement up there, and I'll go over these trades here in just a second, and we'll talk about Amazon. But before that, as always, if you guys need help with your trading, you're struggling in this market, and you need a little bit of guidance, or you're looking to join a team that can help you get to that next level as a trader, visit thelincolnlist.com, click on the Trade Room tab, and you can start trading with us right away. So where do I want to start? Do I want to start out with Amazon? Do I want to start out with the trade? You know what? Here's what I want to start out with. This market is schizophrenic. Now, what I mean by that is I know you're going to have volatility and a sell-off, but what's different this time, at least for what I've been through experience, is that when you do have your bullish up days, you go from extreme volatility to the next day. It's like 2017, no volatility all over again. We've had two real bounce days this whole entire month. That's it. And both of them were like all day meltathons. Now, if you guys are new and you don't know what I'm talking about with melters or a slang term, it's just rips with lack of pullbacks, like no pullbacks whatsoever, or very small percentages of pullbacks. You would still figure that in a market that with this much volatility that you would see a little bit more wild, snappy action. But this market is super trendy, meaning that, you know, when it wants to go down, it goes down all day. When it wants to go up, it goes up all day. That's kind of like the market that we're in here. So let's go over these trades first, and then we'll jump here onto to some of this tech here. The first thing that I got myself involved in, you're going to see a Netflix on there, but that was something I had a little small position yesterday, and I got out of this thing ASAP first thing in the morning because I know it went higher about a half an hour in and had this big old ramp. But once it gapped up, I just really felt, look, man, there's just no way. I held some overnight, and I was like, it gapped up. That's good enough for now because this thing could so easily sell off. So, you know, there's not much to that. Just a gap up, took that, and that was it. So the first trade here came in. No, that was the second one. It was BABA. BABA was big surprise, right? I've been kicking this BABA horse forever. So definitely one of the things I was not interested in was buying these breakouts, especially early in the morning. Now, I know in hindsight that turned out to be the wrong thing to do because the market was very strong. And like I said, in the last couple of these, there will be these bullish rips and stuff like that in these markets. Even in bearish markets, you're going to have these huge days and stuff like that. So I didn't want to long anything. So once it started ripping up here a little bit, I decided, look, let me go for a short here. The market's been, you know, grinding it out here a little bit. Let's go for it. And I tell you what, this thing just became super, super stubborn. Now, one of the things I've also said is I don't want to disrespect the fact that there could be a monstrous snapback rally. Now, the way I think that rally will happen and how it actually happens has been wrong, but you have to respect that we know when you're talking about something, just in particular, NVDA, a stock that's down at one point $100 this month. You know, you have, even though it feels like it is going down every day, you still have to respect the fact, you know, if this thing wants to peel off $25, $30 to the upside on a dead bounce, it sure in the hell can do that. I mean, it is oversold. There's no question about it, even though oversold is becoming more oversold. But you have to respect that. So I did start with a smaller size in this just because I felt, well, maybe if this market gets grindish, I'll have to work it, or, you know, people might get excited about this and start chasing this. So it might be a little bit stubborn, and it was. I had to add, you see on there, I added 4 times before the day was over. I covered for some profit, but I have to tell you, it was a freaking waste of time because you just, you know, you kept adding a little bit. And if I wouldn't have had the small size, don't get me wrong, guys, if I would have had a larger size, I would have had to just cut it earlier. But because I had a small size, I added an abnormal amount of times, like 3 or 4 times here. And then that was it, man. It was like, forget that. Once it got down there, I was like, I mean, I would have made a little bit more money on it, but what a pain in the ass. And that's sometimes your signal. I always look at when you talk about big losses or stocks that get you stuck. There's always this moment that comes by that you say, that was my sign. Right there it was. When you get into something like this that's up this much on a market that's been beaten down and you're not getting the rollover, that means the panic is not there today. People aren't interested in selling it. You got to get out of it. It's just not ready. It's just stubborn, and that's the way it was. I mean, yes, it turned out to be a small winner, but it wasn't anything that's going to put me in the Hall of Fame of stock market trading, that's for sure. Now, things started to turn around a little bit more when Grubster came along. I have 2 trades I took on GRUB, and one was I got into a first short on a rip, and it just wasn't working. I just got too stubborn. Same way, it started consolidating, and then the stock rips, and it was so volatile at the time. I'm like, look, I'm just cutting it. It's a wacky looking stock. I mean, this is something that I don't do often, but I do enjoy it. For lack of a better phrase, is when these earnings losers get smoked like this, they make good shorts on the bounces. And you got a really solid bounce there early that faded. Then it comes back up here, and it just started up around this 101 area. Was my first, let me open this up so I can show you. This was my first idea for going short. As soon as it pulled off of this green candle, starts going red, I said, look, if it goes 101, I'll give it a shot. And it just kind of crested below that. I shorted it, and then the next thing you know, you probably can't even see it. Let's make that a little bigger. Maybe you can. I just have bad eyes today. There it is. And then it just kind of started flagging, and then once it started perking up right here, I said, look, I'm out of it, because the range on this thing, it had bounced from $92 to $101. It's like, it's no joke range. So it could go back another $10, especially with this type of volatility. Now, this was what I kind of talked to you guys about in the news. Like, commissions are so cheap. We sometimes battle with ourselves between right and wrong. Is being right, or is more important sometimes than making money. And commissions are so cheap these days, you can just get out of it if you're not sure. You can always come back to the trade. It's a good way to teach yourself. And it didn't last very long. I mean, it popped back up here, started rolling back over, and I'm like, all right, well, look, I was obviously faked out. Let me go back into the trade and try it again, and this time captured it nice. I took 50% off quickly on like $1 one, and then I rode the rest of it down to like 97 bucks. I'm just running this off of memory. I'm not looking at the sheet. So this was a good one. This was actually the biggest winner of the day, because the second time I put a little bit more size into that thing. And then I worked a little bit of Netflix. Of course, you're always going to go BABA, always going to go Netflix in here with a short. And the thing I was looking at here, I had an early short that was okay, wasn't real huge. But then later in the day, once this ramp got going on here, and then you're going late into the session, I was like, I got to short some of this ramp. Now, one of the reasons people say, why do you do that? That seems like it's insane. It seems like it's ridiculous. And I'll explain. It's common that when a stock ramps up so much within right into the last hour, that this last hour period of time frames, one of the things that's maybe a little deeper topic when it comes to trading is time frames matter. When something's breaking out or moving, sometimes the time that it's doing that, the clock time down here, is important. So when something's been ramping and running all day and you get towards the last hour, profit taking for people that's been in it is not an uncommon sight. So you often see fades on this. It's also an element of range when you're talking about a stock that's beaten up and you've got this continual up movement, down movement, up movement, and down movement. So every consistent ramp that Netflix has put together, it has sold off. And this thing moving from pretty much, not pretty much, just moving straight from $307 to this peak up here of $319. It's an $11 move on a crushed up stock that can't even hold a gain right now. And then people are starting to chase this thing after it's made a $9 to $10 move. I think you follow what I'm saying. That's absurd. And we just kind of look for any sign of weakness, any sign of red, to just kind of start changing that trend. So when you're going up here and you see all these greens, you do have a red here, but it's a smaller red, and the red gets picked back up. And when I say red gets picked back up, if you look real close right here at this bar, you got this wick coming off the bottom, and then, you know, it makes it green immediately. And then you come up over here, you got a little red, but then it just gets bought back up, next 5-minute bar, green. So each one of these reds keep getting picked up, and the following bar is green, and it just keeps going and going and going. This was the first time here that once this bar took over, the next one was red. That was really the sign right there. It's like, this is the first time you've clocked off 2 reds in a row after this run. You're probably going to pull down a little bit, and it did. It faded, but as the day got there, I just took the premium on it. I could have made a little bit more money, right? But coulda, woulda, shoulda. And then look at this little dealio here. Probably sympathy pain from Amazon. So that was my day. Not too bad, but we'll see how the rest of it works. That was a review of the trades I was taking. Now, I was saying stubborn because I said short into strength, and today it was really stubborn there. Really stubborn to get some of this stuff to pull back a little bit. And I think the optimism was pretty high. Now that you're rolling into tomorrow, you got to look at this Amazon. I mean, it really depends on how this dip is translating. I mean, you're getting a bounce here, obviously, from when I started. Hell, that's a hell of a bounce. 1680 to 1708. Not bad, huh? So we'll see, depending on how this gets picked back up. I mean, the thing, it's easy right now. Let's first talk about the market, because we've been talking about that 270, and then we'll move into some of this other stuff. But the issue here is it's real easy on every first green to want to buy, you know, a strong day like this, because people say, okay, this is the rally. And then it follows up the next day with some selling. Okay, this is the rally. Remember, there will be rallies in bear markets, but you're down here at this delicate area, and you did make it back above 270, which we talked was a very important level. And I think tomorrow there's more importance on this, because with Amazon and some of these bigger FANG names reporting, you're going to have to see this thing hold that 270. I mean, that's the number going forward. It's really, really struggling with it. It got up there today, like I said yesterday in Market Mutterings. It better get back up there fast. It went up there in one day. You're going to need to hold around this area. If you start working weakness and it makes a new low tomorrow, you got to look the hell out, because, like I said, underneath of that, you got 10 more points before you really, really start seeing some panic. So that's how I would look at this. I mean, the rest of the evening is going to be important as to how Amazon, you know, claws its way back. I think they probably got a conference call coming up or something. That'll be important to see how this goes. If this doesn't and it remains weak, I would see that, you know, these stocks like NVDA that had their first sign of hope in days, you know, first sign of green here after this monstrous murder event, I think it's just going to get crushed along with everything else. So you have to look here tomorrow when you talk about what is the plan. The plan first will be to see if this market can retain a good portion of the gains that it made today. If it's able to stabilize itself, that's a positive. You know, back here when you had this big green, it wasn't really able to hold it for longer than a day, and then it sold back off again. You had a green right here a couple of days ago, and then it just followed up with yesterday's meltdown. So you're going to have to see if this thing holds up, number one. As for other tech names, I think sometimes when you run into this stuff like Apple here and maybe some of these other ones, that is probably unfair just because techs get hit after hours, or somebody like Amazon that it runs over into Apple or runs over into Netflix. It's sometimes it has very little to do with it. It's just that's the way traders view this stuff sometimes. So let's watch these names. I probably won't play Amazon, but I'd be interested in Apple if it flushed down a few bucks to start the day and I felt the market was going to be strong and you were into some certain levels. I'm still a short seller into any strength until this market can put together a couple of days like today. Then I might change the way I think about it. But, you know, this is one of the first steps. Let's say you're looking at two different sides here to make this simple. If you're somebody that's looking for the bull case and you want this market to go higher and you have longs and you want to know, when is this thing going to go? Is it going to go? Should I cut it, or what should I do? The answer to that is you need 2 days at least. You need this to hold. You need to stop having every single rip get sold off or be temporary. Remember, that's what short sellers went through for several years, is that every down day was immediately gobbled up by a bullish day. It wouldn't stay down, like Brexit, like the election, like some of these other flash crashes. They wouldn't stick. And now you're not sticking to the long side. So the first thing that's going to have to go is you're going to have to actually stabilize and then stop making new lows. And that would be for any stock that you're trading as well. Stop going down to lows. Stop retracing every positive piece of movement that you get. Now, if you're a bear and you're thinking, hey, I want this market to collapse because I want to hit the short button, I still don't think you can go down in the hole. I really think that if you follow this up tomorrow, if this Amazon news flows into tomorrow and makes it a negative and the market starts going down week early, I think you got some problem. I mean, if you're a bear, you're going to love it. I think you're going to see a much more aggressive sell-off than you saw the last time, because that's just what the charts say. So how about we leave it at that? I mean, it really is a day-by-day sort of thing. That's why it's called day trading. You're just getting up, trying to work the day. Some days those days are bullish, some days are bearish, some days are good, some days are bad, some days are stubborn, some days are mediocre. I mean, you never know what you're going to get. You sort of have to wait for the market and things to do what they do, set up, line up, and then you make your decisions. Far be it from me or anyone else to try to predict what's going to happen here. So anyway, if you need help, feel free to visit thelincolnlist.com, click that trade room tab, start trading with us live tomorrow. Other than that, guys, I will chat with you in what has been a very long and grueling mental week. Take care and trade well.